Adam, hello. Happy Thursday. How are you today?
Not too bad, you?
I'm good. I'm good. I'm calling from Fort Lauderdale. Where are you calling from today?
Boston.
Boston. I've never been up there, but a lot of the Florida conferences I go to, there's usually people from Boston talking about the snow back at home and how different it is. Well, tell me a little bit about the company, what you guys do, and how you're serving your customers.
Yeah, for sure. So, Almond FinTech, I'm the CEO and co-founder. And basically, what we are is a technology provider. We serve a wide range of companies, financial institutions and non-financial institutions. And the core technology allows us to provide the best possible FX rates for any cross-border funds flow requirement.
Is that a big problem for people when those rates are not ideal?
There's a lot of money that moves around the world on a regular basis. And if you can save even a single basis point on billions or trillions of dollars, it certainly adds up to quite a bit. Those most impacted, I would say, are small businesses or individuals who are on average paying 6+% all in fees, fiat to fiat, cross borders, and individuals who are a little bit more cost sensitive. But everybody stands to benefit from improving upon how we're moving money today, whether it's the company serving those beneficiaries or the beneficiaries themselves.
What's the platform behind this? Are you guys using blockchain or is this more based on the traditional systems?
Yeah, so what Almond built is this AI-driven optimization engine, and the original goal was just to better orchestrate global money movement. The result is that we ended up achieving real-time fiat-to-fiat funds transfers that beat market FX rates in most all corridors that we're operational in so far. And I'll talk a little bit about the engine's methodology in a second, but specifically to answer your question, we leverage the collective capability of all available blockchain networks and the currencies that move along those networks. So think of it as like Ripple, except that's one network. We
Okay.
stack up every other available network and all the different tokens. By tokens, I mean like USDC, USDT, Solana, ETH. We leverage all of those on a second-to-second basis to pick the best one to move funds from A to B.
And these are generally different currencies from doing, say, the Canadian dollars to American dollars. So your platform would use blockchain to actually do that transaction. Is that right?
Yeah, exactly. So we're sending the money from the fiat currency that is most broadly used, and then it's being received in whatever the local fiat currency is. So we're using these digital currencies as bridges. So it's basically, think of it if you have US dollars and, well, you said, just say US dollars and Mexican pesos. We're going to buy whatever digital currency gives us the best rate when transferred and sold into Mexican pesos. So there's going to be some difference in the value on both sides, and we just optimize which one gives us the most money on the other end.
How long have you been around and how did you get started?
I've been around for a few years. Got started simply by having a desire to solve this problem of relatively expensive and inaccessible financial services globally, which impacts a lot of people. And the starting point is let's fix the financial ecosystem, and more specifically, how is money moving right now? And more traditionally, it's been through very narrow, leaky pipes that are costly for everybody. Takes you a day or two to receive the money, and then a bunch of it's missing when it arrives. So we've got the technology to fix this. And so I pulled together a bunch of super smart folks to actually build this out. So the software engineers, data science folks, AI pros, and then it's been, just a few years in the making. We finally developed a supercharged engine that now you can drop into any company that has this cross-border fund flow requirement.
Is there a certain transaction size this is ideal for? Like, can you buy a cup of coffee with it, or is this mainly for big wires, for real estate transactions? Where is the focus?
So it can serve a very broad range of money movement requirements. Like the cup of coffee example, maybe that's so that's probably individual to individual, like remittances typically when we're talking cross borders, unless you're frequently importing a cup of coffee from Colombia. So if let's say it's $100 remittance, typically what happens is a remittance provider serving those beneficiaries, they work with us, have a few of these transactions executed. They'll move the funds through our system. We'll direct it to get them the most money delivered to the other side. If it's a $100 transaction, typically what we'll do is, wait a couple minutes until it reaches maybe a couple $1,000, and then move that that over. So basically, there's some fixed costs associated with the use of these networks, but that we reach the threshold at which we become like we have phenomenal unit economics after a couple $1,000s. For most institutions, they've got this requirement like on a second to second or minute to minute basis in a volume that size. And then, of course, you can go up to millions of dollars, and you're sustaining very good rates at those levels. So it's a pretty broad range.
Interesting. How are you leveraging AI to grow?
So it's primarily in the technology itself. So this optimization engine, and the methodology is such that it organically evolves to capitalize on each new blockchain that's built, every token minted, every exchange that's open. So there's a ton of optionality built into the system. Someone creates a new stablecoin, it gets factored in. So the ability to like process all of that data, and then look at what you're popping up. The ability to process all of that data and then do the modeling to say, hey, this is the best route through which we'll move these funds in real time. That's where the AI component comes in. Now, it's like a little bit simpler for certain parts of this engine and the optimizations that are utilized. Like, for example, say you want to move $1 million right now, where we're talking about US to Mexico. The first thing we'll do is we'll look at the routes that you can take. Second thing is the timing, when to move funds through those routes. And then finally, there's some more complex.
So you would have some options, like say there's a couple options that are faster, some are slower but cheaper. You could sort of, depending on how much of a hurry you're in, you could sort of choose which route is it. You kind of you're choosing flights. You get longer flights, shorter flights, higher cost, lower cost. So you give that optionality to your customer.
Yeah. So the customer has a lot of input in this. So for example, there may be a requirement to move money as fast as possible. So it's like, hey, we need this money moved in the next few minutes. We can do that. And what we're doing is primarily relying on the routing optimization in that instance. So we're saying, here, we have 100 different paths we can take to move this money. Which one's going to deliver us the best route? And then we'll take that route. If there's more optionality in terms of timing, let's say it's payroll. So Almond, makes a payroll in Singapore on a monthly basis. And we just need to make sure the money's out there, a couple of days before we're going to actually execute our payroll. So we'll have a longer window, up to a couple of days. And then we'll pick the best time at the best day to move the funds over. We'll split it up over time to get the most over there. Almond saves we're averaging about 2.13% better than the best FX rate that we could get from any other source. So it's a huge margin, especially for an early stage company. And this is the kind of service that we can provide.
Let my CFO check this out. Might be, we have people all over the world, so there might be something we could even use.
Yeah, it's a pretty good deal. But so it's the routing, it's the timing, and then you bring all of this together. And there's a lot of optimization that can happen, and you just end up with hundreds of thousands of permutations moment to moment. Might as well leverage all of them. You were talking a little bit about the kind of the AI component. There's a lot that obviously this isn't just historically speaking, what has worked well at different times, and then factoring that into the current moment. It's also looking at basically have all these decision trees. And then we're looking at them across time. So we're looking at like recurrent neural networks for sequential like time series data stuff. And then we're applying a lot of like the models that you would see in like Google Maps, which help you get across town at any point in the most time efficient manner. So this is like Dijkstra's pathfinding algorithm, and then they started using A-star, which is like a graph transversal pathfinding thing. And then where it gets really interesting from there, in my opinion, this is where like true just like innovative AI comes in, is when you think about this max flow issue. So we have so much money that's moving across borders, just like all this traffic that's going across Boston right now. And we have to think about how do we optimize how all of it gets where it needs to go. So leveraging all of the roads.
So can you bundle like multiple transactions and oh my God, that's amazing.
We can bundle transactions. Well, actually, I should have let you finish.
No, I was thinking like if you had multiple customers or a customer doing multiple transactions in those currencies, you can bundle them together sort of behind the scenes and get some more efficiencies that way.
Yeah, we tend to segregate our customers' funds in a very very specific way that's compliant and adheres to regulatory requirements and
Got
so
it.
on. But in the same vein, what we're doing is saying, all right, now we need to move all this money for multiple clients from A to B. We will move those funds collectively so that we optimize the overall FX rate for all clients. Or another example of this is a single client has a lot of volume to move, so many millions of dollars right now. We wouldn't just use, say, USDT as the bridge currency because there's only so much demand for it. There's only so much liquidity for it. Eventually, your rate starts to drop because people aren't paying as much for it. So maybe we will split it up. We'll use USDT for part of it. We'll use
Mm.
USDC for part of it. Maybe we'll split it up into 50 different currencies to get the overall best rate. And then what gets even more interesting is we're saying, how does each decision that we make affect the next decision or affect the market like laterally? So it's not just let's do whatever makes the most sense in the second, but let's do the thing that makes the most sense for our next 25 decisions over the next 25 seconds. So we might make a suboptimal decision now. It impacts active values of other currencies. So the market's very dynamic, but we know how our decisions affect it. Suboptimal decision now, but it makes this subsequent 25 decisions more optimal, and then the ultimate result of all those decisions is better than anything we could have achieved if we just did a good old-fashioned decision tree, classic kind of machine learning model,
Hmm.
in a more linear fashion. Yeah, that's when my brain starts to like melt, but then rebuild into something bigger. But this is why we have a lot of smart on the team and the data science piece.
Yeah, that was very fascinating. I didn't even know that was possible. Thank you so much for joining today.
Yeah, of course. My pleasure.